Hello everyone, welcome to Officer 24/7. This is our channel English Medium JAIIB CAIIB. So when we talk about the exact name is JAIIB CAIIB English Medium. So that is by Officers Adda itself. Everyone, now let's talk about, we have been talking about this series in which I have taken up different topics of JAIIB AFM, that is Accounting and Financial Management for Bankers, and we are currently on Module C. So first of all, everyone, share the session, like the session, and don't forget to subscribe to our channel if you haven't done it yet. Raja, what is it that we're going to deal with today? We are going to deal with Introduction to Financial Management, that is chapter number 1 of our Module C. Module C is the most important module. The reason that I say this is the most important module is that when we talk about this specific area, when we say that we are talking about the area of specifically uh, module C. Module C is something which started, I think it started with the specific area of financial management. This is the first chapter. And then we talk about the specific area of the uh, studies in this particular topic is that when we say that financial management is there, this is just the beginning. Beyond this, you have so many other topics which you will be taking up. And at the same time, when we talk about financial management, this is the entire module which is super duper important. When we talk about the specific term of financial management, it talks about the entire learning of finances. See, you get money, how do you spend it is something that we define as financial management, right? So how do we deal with that? Simple. When we have money in our pockets, the very first thing that should be done is that is how do we deal with it, right? So in this case, one of the most important things that we do is we analyze the particular area, we study the specific area, है ना? We analyze, we control, we plan how do we spend the money. All these things are covered in this specific area altogether. That is why we call this term as the term called financial management. Okay. So when we say the term financial management, what do we see in this case, everyone? When we talk about the financial management, it is a situation where I can say that planning, organizing, staffing. Staffing is basically putting people into the work, so that is there in terms of the first part. Then we have conducting and controlling only specific to the money that we possess. है ना? So in this case, there are different forms of organization which are talking about funds. Not one particular organization require funds, but almost every organization, वैसे तो every organization requires it. In this world, you cannot survive without money. So that's one particular reality. Yeah? So as per the accounting format, or you can say as per Income Tax Act 1961, there are overall 7 types of persons. That includes sole proprietor. Sole proprietor means one single person having a particular books of accounts and then he maintains everything accordingly. Right? So in this case, when we define the specific area of sole proprietor, he will sit down, he will prepare his books of accounts, he will look into the financial management, but in a simpler manner because obviously he cannot go for the professional work and it requires a lot of money as well, isn't it? Right? So when we talk about sole proprietorship, when you are working with the specific area of sole proprietorship, you worked as sole proprietor, then you are looking forward towards transformation into a better scenario. How do you transform yourself into a bigger organization? You tend to work with others. So when you tend to work with others, those are partnership firms. You worked with someone, but everyone, the challenge to work in a specific organization becomes more challenging. Actually, when we talk about the specific area of partnership, what would a partnership do? In a partnership, two or more people will come together and form a partnership, and their finances are now combined. None of them is working all alone. If they are not working alone, that means the finances have to be defined, and the boundaries of each and every person who's involved has to be defined too. Then we have limited liability partnership. That's another kind of partnership which formed due to the dire need. See, the point is, earlier, in terms of partnerships, na, there was what? There was pure one thing. That was unlimited liability. Whosoever is working in the organization is sharing unlimited liability, which is very, very risky. Why? Because when we have an unlimited liability, if the company is dying, you are dead too, and your personal assets would be dragged into this matter, which is very, very scary again, isn't it? So that is what we have in terms of this organization. Now comes the next area which we talk about as a company. See, once you have become bigger, it is not very important that you keep on adding more and more money. It is very important that money that you have got in the organization, it stays with you in a safer manner. When I say in a safer manner, whatever money you add in the business, if it goes into a situation of uncertainty, if it goes into a situation of not only uncertainty but also in terms of frauds and all, it gets risky, then it is more dangerous. So when we talk about liabilities in terms of partnership and limited liability partnership, people tend to move towards more safer and securer area. In terms of having money, that is a company. Companies are covered under Companies Act 2013, right? Tata, TCS, Tata Consultancy Services, or when we talk about Reliance Group, these companies are basically multiple companies are covered into this area. Na? So in a company, the people are different and the company is different. So if I put money into it, the money that I'm putting and the person I am, we are two different things. My money cannot be basically used in this particular area as unlimited funds. है ना? It would be limited only. That is what we cover in this specific area altogether. Once you're done with the cash, with the company, what is next there? The next part is Hindu undivided family. Acha, this is a particular family which is called the Hindu Succession Act. I hope you know about this particular thing. Huh? So when we talk about Hindu undivided family, then what do they do? In terms of Hindu undivided family, there is one particular person called Karta, and then he is the head of the family, and he has unlimited funds that he's putting into the business. Then there are people who are with him; they are called co-partners. So, वैसे तो earlier पता है, women were not even a part of it. Later on, women are also a part of it. So, this is one particular thing that you will find that is specifically in the books of accounts. Now, when we talk about the specific area altogether, then what do they do? In this case, one specific area that happens is in the books of accounts, when we talk about the companies there. Companies are done, partnerships are done, then we have HUF we have Karta, and then we have co-partners. So this person manages the entire money and makes sure that every other person who's a part of it also is getting money there. You know. Then comes the next point, which is there is association of persons and body of individuals. This includes a club. Club and members are two different things. Association of first of all, body of individuals means in this club we are all humans which are a part of it. Okay. In this case, when only humans are a part of it, that would be there. But when we talk about the specific area of association of persons in this club, there are multiple people involved. Who are involved, everyone? In this area, multiple people are involved, which would include what? This would include a partnership which is a part of the club. For example, we formed a specific club, and in that club multiple people are there. That would include that can include a partnership, a company. They are both a part of a club. So in this case, their existence is definitely there, na? It doesn't matter whether it is a person or what kind of person it is. We still form a club. So that is what we define in this area. So now what next can we have? These are the different types of persons, and last is cooperative society. Cooperative society means a specific society which has been formed for the social welfare. For example, farmer welfare society, then buildings. The buildings have their specific societies. Na? Group of buildings being clubbed together, built together, and number of people living there together. That is what we define in this specific area. That is covered here. Then comes the specific area of estimating the capital requirements. Financial management is about what? Money. If you have money, you are using the money properly, and if not, then what to be done? That is all covered in this area. So the next part is estimating the capital requirements. What do you mean by estimation of capital requirements? You need to look forward to how much money is required for fixed assets, how much money is required for working capital. Fixed assets means the specific money which is required on a daily basis if we really want that thing to work. You know? And when we talk about working capital, under working capital, we have a different scenario altogether. How do we say? Under working capital, how is it different? In terms of working capital, whatever money is required for the daily running of the business, that is current assets minus current liabilities. How much money is required to run your business on a daily basis, and how much money is required to keep the business alive? There's a different area. Surviving every day and keeping the business overall alive. That is what is the difference which exists in this specific area. This estimation is definitely required because then you can find out whether you can afford things or not. Don't you think? So then what do we do in this case further? Sources of funds. From where are you arranging the funds? Because ultimately the source will determine the application. Whether the people are putting a lot of restrictions on us, कि नहीं यार का ma'am, you cannot use this money this way, you cannot use the money that way. They can keep on poking us now, and that becomes such a big trouble. But how do we work, everyone? How can I make sure that the things are being done in a proper manner, right? So then we have equity, which can be owner funds, that is right issue, public issue, or private placements. These three things can be there. Right issue means uh, people already have shares and we give them shares at a lower price. Then we have public issue when multiple people can put their money into our organization. And then we have private placements. For example, we give shares to the directors. That is called sweat equity. The people who have worked really hard for this organization and the organization rewards them with ownership. ठीक है ना? Then we have preference shares. Equity are the true owners. They are the residual people, residual owners. Whatever is left goes to them. Preference shareholder gets the preference. They get more. They get more importance in terms of fixed dividends and priority over common shareholders. है ना? Then what do we have? Debt. Acha, equity shareholder and preference shareholder are the owners of the organization. While when we talk about the specific area of equity and preference is all sorted, huh? After this, what do we have? Debt. Debt means they put a specific restriction on you on how to use the thing. They can definitely come up and put restrictions. Ki, this is how you need to use it, and this is how you cannot use it. Think about it now, how much pressure that they are building up on the organizations in this manner. है ना? So when we talk about equity, then we talk about debt, and then we talk about the specific area of preference shares. Basically, preference shares are nothing but hybrid form, right? They are hybrid form of finance in which You are arranging the funds from equity, you are arranging the funds from long-term debt, but then there is a middle of it. Neither the money goes to equity, neither the money is from the extreme debts. In terms of debts, there is no risk at all. In this area, there is actually nearly no risk. While in terms of equity, there is a lot of risk. है ना? So you find a particular area where your risk is less and your returns are more, right? Then what next is there? Long-term investments. What do you mean by long-term investment decisions? Long-term investment decisions means the decisions which are taken in consideration of what we'll be getting in the longer term, not in the shorter term, everyone. In this case, what do we do? First is we identify a project. We find how a project works. That means we look at the potential benefits it can reap, the cost it can incur. Then we have project evaluation. How do we evaluate a project? In this case, what are we going to do? We use IRR, internal rate of return, NPV. These are discounting techniques. है ना? These are something that we'll be learning in this specific module itself. Discounting techniques. Time value of money. Over the period of time, the value of the money goes down because there is an interest involved. The more time passes, the more interest gets accumulated. है ना? So in this case, it is not accumulating. Then it is easier to find out कि ठीक है ना, if I am adding 10,000 rupees right now, after 10 years it will remain 10,000, but this will not help anybody. So in this case, what do? I put 10,000 today, after 20 years it might become 15,000, it might become 18,000. So how does it reach to that level? That evaluation is definitely there, right? That is project evaluation. We look forward to it, but how much money we'll be getting after that? And if I am getting 20,000 rupees after 3 years, what is its value today? Then we have risk management. What do you mean by the term risk management, everyone? How do you manage your risk? Up to how much risk is absolutely fine for us and how much risk is something which is unbearable for the organization, right? Then we have decision making. Choose the best risk adjusted returns. What are we going to do with the returns of the organization? Are these returns worth it, or we need more returns? That means we need to review whether the decision that we took regarding the particular project is fine or not. Then deciding the capital structure. Again, everyone, borrowing from outsiders, using your own money. You have to choose. There's a thin line between the two. This is your own money, so there is a lot of risk involved. This is outsiders' funds. This is a lot of liability involved. There's a lot of burden care. I have to pay back to that particular person. If I don't pay back to the particular person, what will happen, everyone? If I don't pay back to the particular person, he can literally sell off my organization and I won't be able to do anything. So I need to be someone who can afford a loan. Only then I can get a loan. And only then I should take a loan rather. है ना? If I take a loan and I cannot pay off, then it would be such a trouble. Don't you think? So that's another important point. Then we have the optimal balance. How much debt should be required and how much equity should be required. That particular balance is something we have to meet up. So equity, debt, and their optimal balance. This is what the specific area of financial management does. Working capital management is a very important area. How does your entire working goes to? That is your current assets minus current liabilities. You have to decide the specific area now altogether. That is what we define in terms of working capital management. In this area, the adequate working capital is crucial for sustained operations, but excessive idle cash. Everyone, think about it. If I have a lot of cash, that is a very questionable point. Why am I keeping so much funds in liquid? And what's the benefit I'm reaping out of it? If I'm not reaping out a benefit, any benefit out of it, that means I might be involved in some frauds because this liquid cash might be moved somewhere else. That is why we are keeping so many things in liquid. So working capital means we should be having adequate. If I am um, under a situation where I do not have much funds left, and there are a lot of people who are standing and eating my brain. Yaar, come on, where's the money? You need to pay us off. That means I am not maintaining enough funds to meet my emergency transactions right? Though for that particular thing, I should always have money. That is working capital management. Emergency requirements, you should have money. For the long term working, you should have money. So for everything, you should have money. So adequate working capital is crucial for sustained operations. But everyone, excessive idle cash is definitely bad. Your financial health is definitely something which is easy to understand based upon this scenario. Then comes the financial control and compliance. Number one is continuous monitoring. When we talk about the financial control, now continuous monitoring is required. Analysis techniques are required. Regulatory compliances are required. These three things are super duper important. Because always remember, when we talk about the continuous monitoring, if there is not even there's a single day where you forget to monitor the things, there can be a chance that there could be a fraud on that particular day itself, in that particular moment itself. Then you have to analyze the techniques. What are the techniques that you are going to use? All these techniques are a part of your financial management, and yes, a few of these things are a part of module C itself. For example, ratios is a part of this specific area, while when we talk about costing and budgetary control, they are a part of module D. So technically, yes, you're going to deal with these things in detail. Then comes regulatory compliance, law of the land, everyone. Law says, then we have to do it. If the law doesn't say it, then we cannot do it. That's one another important point. That is the financial control and compliance. Then we have the fundamental principles of finance. That includes time value of money. See, this is what I told you. Over the period of time, you have an accumulation of interest. So, if I give you the future value, you have to remove all the interest part, and what you'll be left is the principal that you should have invested today because you wanted so much, so and so much amount of money after a few years. That is time value of money. Then we have risk and returns. Everyone, how do we define the term risk and returns? In this case, higher risk investments generally offer higher potential returns. Higher the risk, higher would be the returns, because that is what you will expect. Why would you put so much of money if you feel that there might not be proper returns out of it, right? Then we have the specific area of diversification. Spread up your funds so that you have minimum losses, or at least those losses can be absorbed. And if you are too much scared, have a few specific areas where you can protect yourself from the fluctuations, and that is what they define as hedging. Okay, so then after this that we have talked about till now is, we have talked about the fundamental principles of finance now, that is time value of money, risk and return, diversification. Then we talked about hedging. Now the next part is opportunity cost. Acha, what do you mean by opportunity cost, everyone? When we talk about opportunity cost, it's the next best alternative use. When we talk about alternative use, that simply means when we talk about opportunity cost, that means, acha everyone, I'm currently working, right? Say I'm getting, say 11 lakh per annum, random amount. I got an opportunity to go for a specific studies where I have to invest 5 lakh per annum, and my income would for 2 years. This is for 2 years, and after 2 years, my income would be 25 to 40 lakh per annum. Just to earn this 25 to 40 lakh per annum, I'll have to let go this 11 lakh per annum. है ना? When you are leaving something to gain something, this is called opportunity cost. The next best alternative use is called this. Got the idea? So when we talk about opportunity cost, this is because of the reason that we are getting more money into the business. है ना? We want to increase our income, so then we will have to let go of something which we have at present. Done, everyone? Next part is liquidity and return. Everyone, it is super important that we earn. Always remember that part. See, if we are earning, then the next part is proof that you are earning. Randomly, a person came and said that you pay 10,000 rupees to me right away. If I can pay 10,000 rupees right away, only then I'm going good now. If I cannot pay that 10,000 rupees right away, then there's a problem. Liquidity means if you have to pay a certain amount of money at a given point of time, can you pay? So if you can pay, that shows your liquidity. If it doesn't pay, then there's a problem. That is how we define this specific area of liquidity and return. When we talk about liquidity, liquidity means if the money can be readily given by you. Return is whether the particular income generation is good enough to sustain your business or not. Then we have the area of cash flow, spreading investment across assets to reduce overall risk. We're going to through this, and we're definitely going to reduce the specific amount of risk and return, right? So that is how we define the entire area of fundamental principles of finance. Fundamental principles would include risk, cash flow movement, it talks about time value of money, hedging. We are scared about the fact that pata nahi we'll have money in the future or not. Okay? So when we talk about cash flow, see, if I have money, I can reduce a lot of losses. But if I do not have money, that is where the entire problem arises. Enough money should be there, and if there is not enough money, the movement of money should be clearly visible. So spreading investments across various assets should be there. Acha. Oh, let's talk about the questions then. Just a moment. The answers are visible, so let's. Acha, this particular question is from the book itself. Huh? So today I'm going to talk about the questions which are there from our book. What does this question say, everyone? This specific question is related to the specific area of corporate social responsibility. What do you mean by corporate social responsibility? Corporate social responsibility is basically a criteria which started with the benefit that the companies are providing a lot of the companies are getting a lot of resources from the world, from the countries altogether, from the society altogether. What benefit are they providing to the society? Are they providing any benefit even or not? If they are not providing any benefit, then what's the fun? है ना? There is a requirement that there should be benefit provided to everyone. If there is no benefit being provided, then the organizations are on the receiving end, which is definitely wrong. So in this case, when we talk about corporate social responsibility, this is the responsibility exclusively of the corporate organizations to give something back to the society. that's how we define the term CSR. It was introduced and actually made mandatory for many companies based upon Companies Act 2013. In their area, they had shown that specific, they had made a specific uh, law, I would say, which was compulsorily required that everyone, if there was certain amount of companies which required that 2% of their total turnover was supposed to be kept for exclusively CSR, and not only exclusively for CSR, everyone. The next part which they said was to maintain the books of accounts as well, that if you have given the money to so and so projects or working, then you need to keep the proof of the same as well, that you are working in that specific area. That means when you're talking about CSR, you not only have to keep the specific uh, money for the under privileged or a specific community or a specific area which the government feels that this is the area where you need to work upon, but also you have to maintain the books of accounts as well. So when we talk about the specific area of CSR, in this case, which one of the following statements about corporate social responsibility is not correct? Everyone, Companies Act 2013 specifies how much to spend. Is this the point? Then the next point is B. CSR spends in total voluntary. This is not voluntary. If anything would have been voluntary, that means it is your choice whether you want to do it or not. Only specified activities are eligible to be covered under CSR. No. There are certain things which they say that, see, when we talk about the specific area, which one of the following is not correct? Now, first point is CSR. Actually, it should be which of the following is correct? Because the first point is absolutely correct. It specifies the company which are required to spend money on CSR. Only specified activities, only the specified activities are covered. The question is wrong. It has to be is correct. Because there is only one thing that is correct. अच्छा नहीं, it's absolutely right. ठीक है, देखिए everyone in this particular area, the first point is definitely we have to find which one is odd man out. First point, when we talk about specifies the company which have to do this mandatory, this is correct. Only specified activities are covered. They have to work for a specific area altogether, as a sector, a particular education area, priority sectors. They are all defined by them. And as I told you, 2% of the same 2% of your total turnover has to be kept aside for this. So technically, even this is correct. The problem was related to this, not correct. Wala point na. The question is absolutely correct. The correct answer is actually B. This is wrong. It's not voluntary. Many companies it is compulsory. Which one of the following is not amongst the business ethics? Business ethics means, see, ethics is a very fine line of working for any organization. So when we talk about ethics there, is not related to philanthropy, honesty, then integrity or trustworthiness. Everyone, what's going to be the answer? See, philanthropy is all about charity. Not every organization can be involved in charity, but if they are working honestly, then you cannot raise a question to them. Can you? If they are doing their charity well, then I don't think there's a problem. If they are doing their work honestly, they have an integrity in the entire organization. And next part is trustworthiness. The organization is trustworthy by the society, not by the organization itself. So if this thing is there, then the charity part is definitely not required. Not every organization should definitely be involved in charity there. है ना? Okay, the answer is A, philanthropy. Next point that arises is which one of the following can be considered as an agency problem? Acha, agency problem is a very serious problem, pata hai? Why do we say it's a serious problem? Because when we talk about the specific area of agency, company, the shareholders, there are two different areas. Shareholder and company are not the same. The management of the company is in the hands of someone else, while shareholders are the true owners of the company. Matlab, owners are not managing the company. So managers are doing the same. So managers are the outsiders who get money to manage the organization. So there's always a conflict between the company and its suppliers. Ki suppliers, nahi. Suppliers are basically what? They're outsiders who provides you goods. I don't think there would be a problem there. Conflict of interest between the company and its customers. The customers, if they have a problem with the customers, now trust me, there's a problem with the organization and its existence now altogether. When we have a specific area of interest between the conflict of interest between the company and the government, if the company is having a conflict with the government, this is the end of the particular circle for the organization, definitely. ठीक है ना? Then comes the next part. Uh, Conflict of interest between shareholders and the management. This is what I explained in the very beginning. So this is the answer. MCQ. Third is D. Risk and return trade-off implies which of the following? Risk and return. See, if I make a risk, I need a higher return as well. If I do not get higher return, then it's not a good thing to do. Higher return should be there if there is a higher risk involved. That's one particular thing that is always there in the business. If you have higher risk, you should have higher return. Yeah, so that means if there's a lower risk, then the return would also be lower. In terms of debentures, in terms of debts, you have an interest. You give money to someone, you get only interest. There's no risk involved further. That's another problem there, isn't it? So in this case, this is striking a balance between risk and return. Last point, everyone. Capital structure implies which of the following? Proportion of fixed and current assets. Uh, then proportion of current assets and current liabilities. That is your working capital. Actually, this is wrong. Then comes proportion of long-term and short-term liabilities. Nahin. Liabilities being short-term and long-term is basically related to financial management. When we talk about debt and capital, this is your capital structure. Why? Your whatever your money you are putting on the table and whatever monies you are getting from outsiders. So that is what you need to balance out. If there is a lot of money from outsiders and not your own money, then there can be a problem too. If there is a lot of money you are putting and other people aren't putting a lot of money, then there's another problem, risk. ठीक है ना? So now let's talk about a specific area altogether, everyone. Let's look at our website before I end the session. चलिए. This is our website, that is www.adda247.com. Go on to the area of all courses, go on to the area of JAIIB and CAIIB, go on to the area of JAIIB October 2024. This is where you will find all our courses, specifically the area of the crash course. It is about to start from this 14th, everyone. Right, so you have just got one more day. From 14th of September, we are starting with the class from morning 6 to evening 9, and then we have 6 p.m. to 10 p.m. All these batches are there, whatever the time period would be there. You can definitely check it out. We have got 200 hours of live classes. Test series are there, and ebooks. Matlab Macmillan books just is all covered there. So if you're preparing for this examination, please go ahead and check it out. Don't forget to use the code 541 where you can get maximum discount, everyone. So, and don't forget to download the app as well. That gives you another 1% discount. So it would be 78% discount for you. So please check it out on our website or on our app for further details. This would cost you 3679.08. So just check it out right away and get the specific